And this is a thing with property management companies. I see everyone wants it to be automated and they want to have distance, and the property manager wants to make money without actually having doing any work. So they're going to have all these other people to do the work. And I kind of took a different approach on it. I was like, okay, I want to solve these issues and I want to make sure the tenants are happy and I want to get things filled as quickly as possible.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grenzig. With me, as always, is John Cohen. How we doing?
We're good. We have some exciting news. We, as maybe people are listening or not, I was messing around with some land stuff, and we actually just went full cycle on a first deal.
Oh, nice.
Closing documents right here. So that's it's exciting. Pure dumb luck. Took a year, but it was a little gamble. It was fun, right? It was a little hobby that will only be a hobby, but it was pretty cool. Got
not
that
going to be a new division of Toro.
What?
It's not going to be a new division of Toro, the land division.
I would love to make it a new division, but I don't know if it is. I almost feel like you like too much money would be bad, right? Like I don't know how to incorporate a lot of investors because, this transaction, the high level numbers, and not to take too much time, but bought something for 18 grand. The total direct mailers, stamps, the whole cost was $909. So let's just call it all in for 19 and a half. And then we sold it for 44. It was July 27th, July 27th, and then closing tomorrow. So about 70 days, double your money. So can you scale that? I'm sure you can, but 20 grand,
Go double your money again every 2 months.
That's so we use IRR, right? So I did the IRR calculation. It was like, if it closes on Wednesday, it's 4,000. If it closes on Thursday, it's like 3,600. I'm like, this is fucking awesome. Like, let's do this again. But there was through quarantine and stuff, right? There was a lot of time. So I dabbled and played around. This one works. Toro Land Division rollout 2021.
There you go. Where was it?
It was in Creek County, Oklahoma.
Oh, interesting.
Yep. Right outside of Tulsa.
Yeah. Awesome. Well, got a mobile home park, did a land deal. What's next? Hotel?
Yeah,
retail?
no, I saw hotel and retail, commercial values down like 25%. So like that, my ears go up immediately. Like, let's buy some books on hotels because who knows, right?
Yeah.
We're getting deals sent to us at 3 caps on multifamily. So that shit's not going to work.
Yeah. I saw, I got pretty pumped. I got the financials for, was it September? No, August. And my going in tax adjusted cap rate is 6.25.
That's phenomenal.
Yeah. T3. So we'll see what happens, but
so I actually, believe it or not, I am not a T3 guy. And before this call, before the podcast, I was talking about this deal. It's right near a portfolio, a deal that we own in Wilmington, and it's 124 units. To be a perfect addition. And it was, I actually used the T3. I was like, if I use the T3, I can almost get it to a 5.5 cap. And I'm like, what am I doing?
The only reason I'm paying attention to it more on this one is they had vacancy and bad debt issues. So they had it's only 16 units. So I think they had like 2 people they couldn't get out. So it was lower and then they had it vacant. So that's the only reason, but it still feels nice to have. So I can't really complain.
Hey, listen, you see 6.5 caps. I was going for a run this morning. I was on the phone and I was talking to buddies like, when do you think 7 caps are coming back? I was like, shit, I don't know.
25 years.
Who knows? That'd be a great day.
Yeah, I hear you. But awesome. Let's jump into today's episode. Got a really interesting guest on today. I think he's got a very unique story. So going to be different from some other people. And also is going to have a really good perspective on, I think, a lot of the same stuff we're talking about, but also the property management side, probably, some of the nitty gritty stuff. So I'm super excited to hear his take because we don't have a lot of owner operators on here. There's not many people who do the owner operator side. Honestly, the last one we might have was, remember Joe Colasuno back in, he was like one of our.
Out of Pennsylvania.
Yeah. In, what's the name?
Harrisburg?
No, not Harrisburg. What the hell is it? It'll hit me later, but
Allentown.
What?
Allentown?
I think he was like episode 20, so it's been a while. So I'm happy to have David on, and I'm excited to hear his story. So that being said, David, thank you so much for joining us.
All right. Thank you for having me on. I really appreciate it. I've been following your Instagram. I've been a big fan of yours. So
Thank you.
I'm glad to be on the podcast.
Well, hopefully I can live up to the hype in real life.
Someone's got to be a fan of him.
Yeah. But why don't you kick it off? I know I said a little bit, but tell people a little bit about you, your story, and what you do.
All right. Yeah. Let me just give you the short version. I'm David Grabiner. I'm the DIY_landlord on Instagram, if anyone wants to check that out. And how I got started was I was working as a hospital administrator in the Democratic Republic of Congo. Mm-hmm. And I was over there and I was like, I want to be financially free. So let's start investing in real estate. So while I was over there, I started investing in real estate in Chattanooga. And I scaled up to about 24 units. And then there was some changes and I decided to come back and I'm like, okay, I'm going to do this full time. So then 3 years ago, I came back to the States, started doing it full time, started managing for another company as well. Like I just jumped in the deep end. They had 120 units and they needed someone to take it. It was like being mismanaged. So they needed someone to take it over. So I took that over, started managing my own units, those units, and just started scaling. So now I have about just over 150 units of my own, and I still manage, for now we're selling it, but I still manage about 50 units for the other company as well. So about 200 units that I take care of on a daily basis.
Awesome. I love it. And where are you based out of now and where are the properties located?
I'm in Chattanooga, Tennessee. Mm-hmm. It's a great market. It's hilarious. You guys are talking about like 6 caps are good. I'm buying stuff at like 9 caps and stuff like that. Like it's a different scale and I understand, the size matters and everything. But my last commercial building, it was a 9 cap. Great triple net deal. But anyways, so I buy everything just around Chattanooga. I'm like I've just networked into my market and I'm kind of an expert in Chattanooga. And I get better deals than someone like you guys. Like if you guys try to buy something in Chattanooga, you're probably going to find the stuff that's at like 6 caps. But still, they might trade something at around a 7 cap around here in Chattanooga.
Awesome. So I love it. So one thing I do want to focus on, because I think this is a struggle for a lot of people, and I think a lot of people resonate, is people try to do it on their own. It's tough to scale up quick. A lot of deals require capital or something else. So, it sounded like you got, you bought a quadplex and then you got up to 24 in a fairly quick amount of time. How did you go about that? How did you structure it? How were you able to buy those deals?
So, we all have advantages and disadvantages in life, and how we go about our business is going to be different for all of us. What I ended up doing was I ended up partnering with my dad. Now, he didn't have any extra money besides, we didn't have much money to put together. We just had like the down payment on the first quadplex. That's all we had. And we put it together and we bought a quadplex. And that was our first deal. And all we did was, okay, we save all the money. We save money from our W-2 jobs, and we invest again. And we just did basic stuff, nothing fancy, just basic stuff. We did one cash out refinance, we refied our first property. But everything else was just basic, using conventional mortgages in his name because I was in Africa, so I couldn't even use my name on the mortgage. It was all in his name, but we're 50-50 partners. And we did like 24 units like that. And it worked. We were getting good deals. And at the time, this was a little while ago, it was easy to get good deals, cash flow deals. And that's kind of how we started. We got to one point, but then to take it to the next point, we had to get more creative and do more creative purchases.
Gotcha. So let me ask a question, because you said 150 units, roughly, I think you said 16 million bucks.
Yeah.
That's, if you did a conventional loan, you're talking $3 million, $4 million in equity. 24 units at a similar price point, that's not an insignificant amount of money when you're starting out. Was everything just a lot cheaper then, so it made it easier to get up to 24 units? Or were you guys just like super strict on saving and just barely spent any money?
Yes and yes. I don't know if any of you guys are familiar with Mr. Money Mustache, but when I started investing, he has a podcast and it's all about like living on the minimum. So I wasn't making much money, but yeah, saving everything. Like I like really sacrificed. We were not living high at all. I mean, I don't live high now, but like really, really sacrificing just to save it all up and reinvest it. And things were cheaper back then. I mean, I was buying the duplex for like 75, 80,000, which now that same duplex goes for 150. So that was just 6 years ago. You know, that's just how time flies. And obviously I did benefit by the market changing like that, because I have been able to take advantage of my increased equity positions. Obviously, there's something I bought from 7. I didn't do anything to change it, but it was worth 80 then, and now it's worth 150. So I benefited from that, obviously, in order to leverage that, my assets in the future to grow more.
I'm sorry, because like we were talking about, living on the minimum, or I read something that was really interesting today that talked about that principle. It was you and your dad, right? So I read something today where it said, like, if you take $500 and you can get like 4 or 5, maybe 10 cousins, or maybe mom, dad, brother, and a family, if you guys can put $500 in savings away a month, each of you, so 10 people, $500 over the course of 12 months, that's $60,000. That $60,000 can go buy 4 starter houses, or, $400,000 houses with a deposit of $15,000, or $80,000 houses. If you did that for 4 years, you could acquire, whether it's duplexes, single family, or you can actually, only $500 a month, really do some damage with, 8 friends or mom, dad, and something like that. And I read that today, and I never looked at it that way, but it takes a page out of your playbook where you basically said, I was using, living on the bare minimum, taking that $500, throwing it in a separate account with a couple friends, saving for a year, working your job or doing what you're doing, and then going out and executing that. And I think that was, when I read that this morning, I was like, that's something that nobody really truly talks about as much as it probably, how powerful could that be with, a family of 4 comes together, maybe it's 1,000 or whatever, but it was pretty intriguing. And you sort of,
I mean, I started, so I was only, my salary, the biggest W-2 salary I've ever had was $54,000. And that's for my family income. So it was not like I was making a lot of money. But we were saving like 60% of it to reinvest it. And I just started with $12,500, and my dad put $12,500, and that was the down payment, right? So it wasn't like it was a big sum of money. If that's basically, if people think about it, if they have a car payment for 2 years, if they didn't have that car payment for 2 years, they could save up that money and start. And then once you start and get rolling, and that's what I saw. I was like, okay, this is working. I'm saving. I'm making money in the business, but we're just reinvesting. We never touched, in those first 3 years, we never touched a single penny from the business and put in our pocket. It was all just going back in. And now it's funny. You get to a point where I'm at now, and you realize, well, money's not really the issue. It's the deals that matter, because once you've done it and you have experience, and now you have a name for yourself, and you've networked, and you know how to manage these things, when you find a deal, people believe you, and you don't even need to put your own money in at that point. But you have to start somewhere with good financial discipline, because if you don't have financial discipline in the beginning, you're not going to care about your money. You're not going to care about other people's money, and it's just going to be a disaster. So you got to start with that discipline in the beginning. But then once you get the ball rolling, it's really not that hard to keep growing.
Yeah, agreed 100%. So what was the transition like into the property management side? Who was handling, I think you said 24 units when you came back? Why did you decide to come back as well? I'm just curious. And why did you decide to take over?
My dad was actually managing the properties, the 24 units, up until that point, and he had a full-time job. And it was interesting. Originally, we thought we would get a property manager, but then when trying to find one, it just didn't really find one that would work. So he just was managing, like, oh, it was working a little bit. And then he got sick, actually. He got misdiagnosed, but he did get sick. And they thought he only had 6 months to live. Fortunately, that wasn't the case, and he's going to live for many more years. But we decided, okay, I want to move back and be closer to my dad. And if I came back to the States and got a hospital administrator job, I'd have to go wherever the job is. So I just decided, well, if I just do real estate, I can be right in Chattanooga, right next to my dad, and it can be flexible. So that's why I decided to do that. So I jumped in managing my own units, and I'd never done it. And then I jumped in managing right off the bat 120 units. And like I said, I'd never done that either. But I jumped right in. I was like, okay, this is the opportunity for me to live close to my dad and to grow this real estate business.
Awesome. So what was it like taking over, not only, it sounds like 150 units, give or take. What was that process like for you? Was it, already had good systems in place with your dad, so you just kind of expanded it, or was it, kind of flying by the seat of your pants?
It was kind of flying by the seat of my pants, but I'm a pretty good communicator with my clients, and I view my tenants as my clients. So I jumped in, and this is the thing with property management companies. I see everyone wants it to be automated, and they want to have distance, and the property manager wants to make money without actually doing any work. So they're going to have all these other people to do the work. And I kind of took a different approach on it. I was like, okay, I want to solve these issues, and I want to make sure the tenants are happy, and I want to get things filled as quickly as possible. Because I looked at that, I was like, okay, things are empty, we're not making money, or things are not getting repaired, it's costing us money because it's costing more damage. So the way to fix that is, okay, to be responsive to when people are looking for properties, and also keep my tenants so they don't leave, and fix the issues. So I created a Google Voice number, and I gave all the tenants that number, and it forwarded to my cell phone number. And I just jumped in. So I'd be getting phone calls, and like, okay, this is an issue, this is an issue, this is an issue. And I got all the issues funneled to me directly so that I could start handling them. And that kind of forced me to like, okay, I have to face this, and I have to figure out how to solve each one of these issues. Now, people might think that wasn't a good use of my time, but I learned so much by being the frontline person, hearing every single issue, and then figuring out, okay, what's going to be the problem. Now, I still keep that same number, and I have people, but I've trained them. They mostly text me. So if they text me, it's not an issue. I just forward that text to who it needs to go to. Maintenance guy, boom, here's a text for you. If they're looking for the property, I just text back, here's my website, go apply online. Like, it doesn't take that much time, even though I have 200 units that I'm dealing with, but I'm directly connected to the people who need the service.
So were you doing all the maintenance requests yourself and fixing things, or you found people to do that for you?
So I did find people to do maintenance and stuff for me. I'm kind of a hands-on person, and I started also going around, like when I had time, I would be like, oh yeah, I'll fix this, I'll do that. And I still do some of that because I do enjoy my hands-on work. I don't like doing like a whole day painting an apartment. Like, I don't ever go paint an apartment.
Right.
But if it's like a quick, I'm in the area, yeah, I'll pop in and I'll fix that sink for them. Yeah, I'll pop in and I'll change the lock or whatever it is, something quick, fix the toilet. Because I like the knowledge of how things are done. I don't necessarily have to do it, but I like to know how it's all done. So even if I'm hiring a septic tank guy or whatever, I want to be there and see, so I know the things to look out for. So I know what to expect next. So yeah, I do pop in and do some things hands-on, but I always had a maintenance person I could call, or some painters I would call to get some work done when they needed to do it.
So in those early days, did you call someone to do the problem and you watched until you learned how to do it? Or did you say, I'm just going to do this until I can figure it out and fix the problem?
So I have a little bit of construction background.
Okay.
I worked as a framer and did some other construction things in college. Actually, I had my own framing company. So I have a little bit of hands-on, construction background. So the stuff I knew to do, if I knew it would be an issue, I would just do it. But the stuff I know I didn't know how to do, yeah, I would call someone else and get them out there and then see how they do it. And if it's like a good example of this is an appliance repair for like stoves, for example. I would always call the appliance guy, and I still call him sometime, but I started watching what he was doing, and I started looking like, oh, there's an error on the stove, and you have to swap out the computer on the stove. Well, he's going to charge me $300 to swap out the computer, but all it is taking out 4 screws and putting another computer in, and I can go buy that computer at the store for $116. All right, well, if it's that issue and I know it's exactly that issue, then I'll just buy that computer myself and swap it out and save myself, $200 by watching the expert.
Yeah, interesting. You did touch on that part earlier about a lot of people want to automate it and stay distance. It sounds like you're not, maybe I'm just wrong, because a lot of the property management software I hear about will take work orders and maintenance requests and help with the leasing side of things. Do you use property management software,
Yes.
but you just funneled things outside of it?
Yes, I do. No, I do use property management software as well. I use Buildium, and it's a good software. I know the bigger guys normally use AppFolio or something like that, but I like Buildium. It's pretty intuitive, and it has like everything you're talking about. Like people can put maintenance requests on. Some people do. Some people prefer to text, because there's some people who aren't so good on the computer. Just honest, and it helps with leasing. I do all my e-leasing through there. I do my marketing through there. So yeah, there's a lot of stuff I use it for. And after I got to about 30 units, I was like, okay, yeah, I definitely have to. We were doing like spreadsheets and Cozy up until 30 units. I was like, no, this is not working. Let me get a real system.
Right.
So Buildium has helped a lot. And I have my maintenance guy. He's into my Buildium too. So he can see work orders as soon as they come in. So I do use that system and it helps. But what I was talking about is it's always interesting when I try to call a company for a landlord reference and I see what type of property management company they are. It's the ones where you can never get someone on the phone. You call, leave a message, and they don't get back for like 3 days. If they do, you email, and then it's like 2 days later, you get an email back. And I look at that and I realize I was like, okay, I know your business really sucks because you're not taking care of your tenants because there's no way for them to get a hold of you if they really need to. And as an owner, I don't want someone that lazy managing my properties. Let me just call it lazy, because if you're not getting back to prospective people, how are you filling properties quickly? And filling properties right away is just like one of the number one ways to save money. A vacancy for more than 2 weeks is like unacceptable.
Right.
I say that all the time. If you ever really want to lose some sleep, just call your management number and see how long it takes for someone to get back to you. Because that is a telltale sign of either laziness, just shitty business. And I say that's the number one thing. If you ever, if you're an absentee owner and you really want to get sick one day, just pick up the phone and call your management company, because you 9 out of 10 people, they say you want to be a good salesman or you want to be good at your job, just return calls or answer calls, because most people just let it go to voicemail and never get back to people. And people fall into that habit. I get it, but the management side is super tough. It's so just pick up the phone and call your manager, and you'll find out if they're a good manager or a bad manager, or it's one layer of defense to vet somebody to see what they're doing.
And kind of how I see it, I don't think managing your own property is for everybody. I'm kind of unique in that I'm not saying it like I love doing it, but I enjoy it sometimes. And I definitely enjoy the money it makes, the money that I'm saving. Like it's worth the money for my time at this point. I'm not going to do it forever. I'll probably train someone to take over from me. And then I'll just be higher level. But when I do that, even if I hire a property management company, since I've done it, I'll know if they're doing a good or bad job. If a management company says, well, it just takes a month to fill stuff in your area, I'll know that's wrong. No, it doesn't. You're just doing it wrong. If they say it costs $2,000 to paint the apartment, I'll be like, no, it doesn't. I know that's wrong. So if you've never done any part of it, if you've always just, and you haven't done the research and you're just an absentee owner and I'm just going to buy and I'm going to give it this property management company, you've done no research and you have never even done it, you're not going to know when they're doing a really bad job.
Exactly. That's like people say it all the time. How do you know how much that's going to cost? It's like, well, we had 4,000 apartments in different areas. So it's the material. If someone says it's going to cost $1,000, I know it costs 600. Well, okay, why is it going to cost 1,000? But if you don't know and you're buying your first deal and you're just getting bills, you got to spot check it. And then that also comes with being an expert in the area, right? Talking to different management companies. When anyone's looking to buy something and they're going to have a third-party manager manage it, I tell people all the time, talk to 3 or 4 of them and ask the same question to 3 or 4 of them and see the answers. If the answers are like on a wide spread like this, someone's wrong and someone's right. You got to figure out which one's right. So it's interesting, but you're right. If you've done it, and you don't have to do it on 200 units. If you do it on a duplex and you're renovating a duplex and a tenant leaves and you have to paint the apartment, that's the exact same cost on a 24 unit or a 50 unit, pending similar square footage, right?
Right.
That's the only thing that's going to throw it off. But you got to do it once, and you don't even have to do it for 2, 3, 4, 5 years. You could do it for a month, 6 months, and you're going to figure out how much all that stuff costs. And it's a very hands-on if you want to take that approach, or you just got to talk to more people and ask them more questions, and then you can sort of paint your own picture. But I agree. I think if you don't know, you don't know, and you don't know if it's good, bad, or indifferent. So, coming from your background,
there should be an area of your business, if you're doing this, that you've done hands-on. Whatever it is, like there has to be some area that you are kind of good at, whether it's like, oh yeah, I did all this prospecting or whatever, like there has to be some area. If you want to just like outsource everything, which is kind of the fad, is like everything be outsourced, then like, well, what value are you actually bringing? Like, where did you actually learn something? Where are you an expert in your business? If it's nowhere, then it's like, it doesn't have to be the management. And, it has to be somewhere though in your business, your line of business.
I say that all the time. If you're taking something that someone brings you and you're giving it to somebody else and you're playing middleman, now you may be adding value because you're offering that opportunity to people that may not have that opportunity, which is value. But for the most part, that's the new trend today. Every 20-year-old kid wants to do something on Instagram and they want virtual assistants, and nobody wants to work, but they want to make millions of dollars. I'm on the other page of, you got to do something. You got to do something really good where that you do it better than whoever, and that's the value you're bringing to the table. So I when people say that, I like it, because you speak to kids and people today, even older people, and they're just, well, I'm going to have this person do it and that person, and it's all dictation. Meanwhile, they have no idea what's going on.
Yeah. It's one of the reasons I get nervous when people ask me about turnkey investing. So many turnkey investors want to do literally no work and have this polished product and have somebody take care of it for you. But the person that is selling it to you and managing the property has no skin in the game. So it's not even if you go buy your own property and then have someone invest it, you're probably going down to at least inspect it or see it yourself. I know so many people that buy turnkey that just buy it and they never go see it, and it's out of state, and they just trust that everything's done right. And, I saw pictures or I saw videos, and that's just mind boggling to me. And it's just, it's just ripe for not doing what you need to do to understand what's going on, or for somebody to take advantage of you. And not saying that turnkey providers are going to, but it makes it very easy for someone that's in a tight spot to start to cut some corners to make some extra cash because something else is going wrong. And I just think, to your point of, if you don't know anything about it, you're literally just asking somebody to do it for you. I think you're setting yourself up for failure at some point.
Yeah. There's been a lot of fraud in turnkey investors. I mean, you look, it happens. Obviously there's some good ones out there, but even the good ones, I'm sure if they're really good at what they do, they're keeping all the best ones for themselves.
Mm-hmm. Yeah, it's tough.
That's they're two of my friends are, they do the same thing that we do on the multifamily side, and they have investors and they also buy deals by themselves. And I always ask the question, how do you pick and choose which ones you buy and which ones you invest? Because it's not like, for us, Toro buys $20 million properties. I personally can't buy a $20 million property by myself. Chris is buying a 16 unit by himself. That's not a deal we would ever bring to investors. It wouldn't make sense. So, but they're buying like kind stuff. It's like, 100 unit, or we're going to buy it for ourselves. So I always ask the question, what do your investors say, right? How do your investors ask? Like, do they ever ask a question? It's like, yeah, but it's never really been an issue. I'm like, okay, good. But I always question that too. It's like, well, listen, if they can buy this for pennies on the dollar and fix and flip it and sell it or rent it, why wouldn't they? Now, I agree with Chris. There are good ones out there that inevitably by trade do the right thing. But I always ask that question in any situation. I'm just a super skeptical New Yorker and I don't believe anybody. But you got to ask yourself the question, if they're bringing this to you, what was the issue? Maybe they didn't have the capital at the time, right? But at the same time, if they're cherry picking them, Now listen, if it meets your needs, and this is, this goes before, after saying something like that, if you're an investor looking for a 5% cash on cash return and it checks off the box and it gives you what you want, it should never be an issue, right? If you're happy with what you're getting and you're okay for paying for it, no issues. But if you want a little bit more and you want to do the work, well, then you can't expect someone to do all the work for you and not make money or give you a lemon maybe. So I get it. It goes both ways. But I ask myself the same question all the time. Like, that's a really good deal. I'll just do it myself. Oh, not so good. let's wholesale it or turnkey it or whatever it is on every level, single family to, institutional quality product.
Yeah. And that's kind of why I only invest in my market. And I know you guys who are doing syndications, you have to go on different markets wherever the deal is, and you get diversified and everything like that. But when I started managing and then networking and getting stuck in this market, I find a lot of the deals, like the real deals, like I closed on a deal, 124 unit, got it for like 42 a door. And, market price over here is about over 70 a door. And it was just a deal I was able to close just because I'm stuck in this market and persistent and stuff like that. So that's because I'm involved, like my management, my networking, like I'm really, really involved in my local market. So I can get those type of deals. I don't have to go for the stuff that's listed or like that. And I think of, if I hear of another deal in Charlotte or another market, I'm thinking is this really a deal? There's got to be another David Grabiner over there scooping up the real good deals. I'm just getting the one that somehow made its way all the way to me. It's not going to be as good as they're saying.
I say that all the time. If you're a new investor in a new market and you're buying a broker deal, you are not the first person to see that deal. Now, it doesn't mean it's not a good deal. It just means that a lot of people have passed on it before it made its way to you. And there's nothing wrong with that. But if you get super honed in and you become an expert in an area, inevitably the deal flow will fall to you first, whether it's on the management side or just being an expert in the area and knowing every owner and knowing their situation, or if you brand yourself in that regard. So yes, I agree. Typically, I tell people if you're buying it and it's listed or whatever, there's a reason why you're buying it if you're a new investor. I mean, one of the deals we bought in Jacksonville, it was a marketed deal, right? And we knew it going in, but it also was the domino. And then we ended up getting, 6 deals after it that were more or less all off market for the most part, right? Or quietly shopped or whatever. So, but that's because, sometimes you have to sacrifice a little bit for the greater good. But at the same time, everyone has to understand there are locals in that area that talk. And if it makes its way all the way to a brand new person, maybe you're just super special or you're going to pay for it.
Although I will say the bigger stuff, like over 100 units, is a little bit different because that stuff doesn't normally, it's kind of annoying. They don't normally even market it locally. Like you'd be like, oh, this really high-end big stuff. Like, oh, that got listed. It didn't even get shown up in the local market. No one even saw it. They just spread it out to, the Toro Group and all the other people from outside of town and asked them to buy it.
Yeah, no, there's definitely a threshold. We were actually talking about this in a little mastermind I am talking about like direct mail and cold calling and sourcing off market deals. And there is a threshold when you start pushing towards that, 100 unit, 80 unit. Once you start getting up there, you're just dealing with a different owner class, right? Maybe it's not a mom and pop, or maybe it's a group, and maybe there's some, where they need to bring it to a brokerage shop or a big national firm or whatever it is. So you're 100% right. As you go bigger up, they're harder to shake free than on the smaller stuff or, that sub 150 or whatever it may be.
Yeah.
Yeah. I mean, you basically just have to reverse engineer it. If you're a seller or a broker that has a deal, you want to do the least amount of work to make the money. You're just going to earn a commission. So if you have somebody that will buy it, you're going to bring it to them first, or you think they're the most likely to buy, you're going to bring it to them first. Someone like you who's only buys in Chattanooga and buys a certain type of deal, if that deal comes up and I'm the person selling it, I'm going to bring it to you. Because if you buy it, I know, high certainty of closing. You've done it before, so I don't have to hold your hand. It's just going to make my life a hell of a lot easier. So once you see that, like you said, once you see that sub 80 unit deal that starts getting passed around online, or you get the blast emails, or it's, on LoopNet. I mean, so many people have seen it and passed over it for one reason or multiple reasons. How are you going to all of a sudden do better than someone else? Now, maybe it's, a 6 cap in Chattanooga and you don't like that, but we can't buy 6 caps anywhere else. So we're like, screw it. We'll go to Chattanooga and, buy a 6 cap. That could very well be the reason. And, that's a part of it of, sometimes people have different return metrics, but there was a very good reason why you did pass over it. So you just got to know that when you're going into new markets, new areas, new assets. When I tell people that, or they hear John say it, they're like, wow, you guys are paranoid. It's like, it's not paranoid. It's reality. Like, this is what happens. So it is super important to know.
Yeah.
Have you, because I think it would also be interesting, because I think a lot of people, especially when they're starting out, you always play that delicate game of, pushing the needle to make a deal work versus sticking to your numbers. And maybe you don't want to lose a deal, so you might pay a little bit higher than you want, but like, where's that line? Do you have any good examples of a deal where you kind of stuck firm and then it came back around, later and you're able to buy it, or that hasn't happened yet?
Yeah, no, from the very beginning, we had a very simple metric.
Mm-hmm.
We wanted 20% cash on cash return.
Mm-hmm.
And I know for apartment guys, and as I get bigger, there's a lot of other things in life. There's
Mm-hmm.
equity gain, and there's a lot of other things to life besides cash and cash return. But as a new investor, that's probably the best place to start.
Mm-hmm.
It's really simple to calculate. It's really simple to understand, and it will save you from getting in trouble. Now, it doesn't have to be, your metric doesn't have to be a 20% cash on cash return. It can be what makes sense to you. But for me, that's what it was. It was just kind of, in a way, arbitrary, but it was like, okay, this is the return I want to get, is the 20% cash on cash return. And we stuck to it. And if a deal didn't work, we didn't do it. And it was good because sometimes we made mistakes in the beginning. We forgot to calculate the city tax. We only calculated the county tax, or some other mistakes, or didn't rent for what we thought. Like, we made mistakes in the beginning. But when you have that spread, a 20% cash on cash return, it means you have healthy cash flow.
Mm-hmm.
And especially when you're putting 25% down, when we're doing it, conventional. So that was important. It's important to stick to your numbers and not make them, fudge. However, you can get creative when you get to a certain level.
Mm-hmm.
You can start being like, okay, I want to get 20% cash on cash return on my money, but what if I brought in a partner? Or what if the owner did a seller carryback? Or what if I did a lease purchase option until I could get the rents up? And so you have to look at things more creatively. But in the beginning, start with a pretty basic metric and stick to it, because you don't want your first couple of ones to be disasters. You'll just stop right there. Your first few have to work, otherwise you won't keep going. And to go back to, well, I'm not an expert in the area or whatever, and you're just starting out, as a seller, as a buyer, your goal should be the easiest buyer ever. Like, you should be what the sellers want to work with. Don't be, be easy to communicate with. Don't be a jerk. Like, don't nitpick every little tiny thing. Like, be the really easy buyer. And then the brokers who are selling it, they'll remember, oh, he was an easy buyer. If I have another deal like that, I want to work with him. Even if it's just for a duplex, even if you only have one duplex, but if you were the best buyer, and if that broker happens to have another duplex come out, they'll probably go to you because it was so easy in the purchase.
So how do you find that balance? Because I think that's a really tough balance, I think, to find, because you obviously want to inspect the property and make sure everything's up to where it needs to be. And you obviously don't want to buy a property that you were told was one thing and is actually something else and doesn't quite meet what you're looking for. How do you keep that balance between, doing the proper amount of due diligence and inspections on the property versus being a easy buyer and not nitpicking and not making it a tough process for both the agent / broker and the seller?
Okay, so that's a really good question. If you're a new buyer, you're going to want to get an inspection. I can normally do my own inspections, but sometimes I still bring an inspector, or sometimes I'll bring someone else. If I know there's like a foundation issue or a roof issue, I want an expert to look at. Mm-hmm. But here's what I did in the beginning, and what you can do. Try to only see the property as few amount of times as is necessary. Okay? Try to get everyone there at once. And if you can do it all at once, like you see it, the inspector sees it, or only 2 times, like you see it first and then the inspector goes out. Don't be always trying to see this property. Mm-hmm. I don't even normally go to see the property before I put it under contract. I want them to know that I'm serious. I put it under contract, then I go see it. So limit the amount of times you're disturbing tenants, you're disturbing the seller. Mm-hmm. Try to do it in as few amount of times as possible. When you get the report, be reasonable about it. You can share the report with them so that they can see all the issues that were there, and then only ask for the major issues to be repaired or taken care of, or money to be paid for that. If it's minor and you can fix it easily, don't don't just be like, oh yeah, everything on this list needs to be fixed. You know, like if it's a leaking sink, it's not a problem. Like you can fix the leaking sink. Like those little things, it will go to show that you're just not nitpicking. You just want the major stuff taken care of. So yeah.
I think that's important. I don't think people give enough credit to not. There's nothing worse than selling a deal and a buyer wants to go there every week, right? It's like, oh, I need my inspector to come here. Oh, I need this to come there. It's like, just knock it out, right? I've done it. I've bought a lot of property, single family to multifamily. Get everybody there. If you're doing renovations, bring your contractor, bring your inspector, bring your third-party reports. But there is nothing worse than having to turn over, the tenant base and, I need to see 10% of the units for a PCA. Oh, the appraiser wants to see this and the inspector needs to see that. Oh, my contractor's coming back. Like, knock it out. I mean, that's something to be said about just the level of professionalism that you bring it one time. I'm going to disrupt it for, 2 days or whatever it is. And that's it. And now I don't got to go back to the property, maybe one final inspection before closing, like a quick walkthrough. But that's important. And then the nickel and diming drives me crazy when they're like, well, this doorknob doesn't match that doorknob. I don't give a fuck. It's like tough shit, right? Like if the foundation's cracked, we'll fix it. Like that could be significant. But I don't think people talk about enough of just the unpleasant of disruption around the property. And if you can get it all done in 4 days, if it's a bigger property, or you just get it all done. Or if the seller says, hey, listen, you can only do 10% of the property every week, that's totally different. But try and work with them to make life easy and facilitate that transaction. Because there's something to be said about a group that people like working with and someone that just makes life hell, right? It's going to be a lot harder to work with that group again or be that buyer again.
Exactly. You kind of have to, if it might be hard for people who've never sold anything to put themselves in the seller's shoes. Because, when I sell something, I don't let anyone see it until it's under contract. Like, I'm not disturbing my tenants just so that you can walk around. No, it's got to be under contract. And some people are like taken back by that. It's like, no. You have to realize that the seller wants the least disturbance necessary and for it to close. They don't want to go through this multiple times. So if you can be that buyer, if the broker can tell the seller, hey, listen, this person's price is a little bit lower, but when they say they're going to buy something, they're not going to nickel and dime you. If there's some major issues, they're going to ask for that. But otherwise, their word is good. You're going to get a lot more deals for a better price because they know it's a sure close as long as there's nothing major with the property.
Yeah. It goes back to, the whole conversation of automating stuff. If you're a seller, you don't want to work more than you have to sell a property. And that's why, the deal that David, you see first in Chattanooga is you're the one taking it down because they know you're going to do what you're going to do and that you understand what's going on and you've bought probably similar types of properties, or at least you know what's going on and you have that reputation. That person is more interested in that ease of process, most likely, than trying to get top dollar. Because if they're going to go top dollar, they're probably going to go to market with it and try to get as many eyeballs on it as possible. So that, there's that either actual bidding process or, kind of an informal bidding process and try to maximize dollars. And they're going to sacrifice people coming to tour the property before it's under contract. And, the agents getting in there to tell you things that needs to be done before it sells and taking pictures and marketing and multiple bids and, the possibility of it falling out of contract and having to do it again. That's what they're willing to do to get top dollar. So, it's always important to know, who the seller is, what they're looking for, and kind of what's more important to them, that pricing or the terms and ease of transaction, because that's how you can really buy some of those deals that are quote unquote below market by being an easy buyer, making it easy for them, closing quicker, having hard money, or non-refundable deposits, whatever you want to call it. And doing things like that will help you get some of those deals done. I mean, that was the deal that I wish we would have bought was a 64 unit down in Jacksonville. We offered all cash, closing I think 40 days. And another group came in. We had a signed LOI. We sent them the first draft of the PSA. And then another group came in with an offer $1 million higher on a 64 unit with normal terms. And he decided to go with them, which I don't fault him because it closed and he made $1 million more. But it's the ultimate, difference between the two of, ease of transaction, hard money, all cash, no loan, quick closing versus the traditional side, which still wish we would have bought that deal. But
that's funny though, right? I understand this is how the marketing, how it's done, but like the LOI versus the PSA, like, don't you just wish you had sent in a PSA and had them sign it instead of messing around with an LOI?
I guess it's just for, and maybe it's different, maybe it's not. There's so many negotiations back and forth on the PSA that it would just be a waste. If they're not going to agree to a price, I'm not going to waste my time talking about, the seller's default or, how many days for due diligence and how much notification they need to give. And it's just extra time. So
it's funny because to both your points, right? We've bought deals where I'll call our attorney and say, listen, I know this is not a perfect PSA, but give me the vanilla box where I'm protected, but I could tie the property up. Like even that's how Ortega was. We used the standard Jacksonville, right? It's like as the buy side, I can get behind, as long as I'm protected and I'm not going to be taken advantage of, I'm okay with it. Sometimes though, everyone wants to go down to the last penny, and next thing you know, you're spending $6,000, $7,000, $10,000 on
going
contract.
back and forth.
It's crazy where it's like, hey, listen, it's a vanilla contract, right? Like nobody wins, nobody loses. I'm going to transact, so it's irrelevant because it goes both ways. You're 100% right. Where on that deal, I was like, can we sue? What can we do? Can we put a lien? And my attorney's like, you can do whatever you want, but how much money you want to spend going to chase it down? Now, inevitably, we could have spent another $1 million because the deal would have made sense. But, listen, you win some, you lose some, and you got to roll your sleeves up and, get up when you get some black eyes. But you're right. In that situation, if we were going to go so aggressive, maybe it would have made sense to send, a vanilla contract. But, be that as it may.
Yeah. So you said earlier on, just as, we're getting close to the end here, that you're actually selling some or all of the properties you own. Is that right?
I'm selling. Well, I've just sold a couple of my own, smaller duplexes or whatever that don't meet my criteria, or I didn't like the area or something. Just kind of changed my opinion on them. But I'm selling the apartment complex that I manage for the other company. It's an interesting situation. I'm the president of the LLC, but I don't have an equity stake, and that company, in any case, we bought it really well and now we're selling it. And because it's wholly owned by a nonprofit, there's going to be no capital gains. So it just makes sense to buy it, sell it, and try to find another property. So that's basically what we're doing. We can flip it pretty quickly. It'll be like a 2-year turnaround from buying it, increasing rents, and then selling it.
Gotcha.
On that one. So probably be looking for another property to put that money into. But, yeah.
Have you had the thought or discussions with people about starting to bring on more investors and scale into larger deals in other areas so that you can, maybe diversify a little bit or have larger properties or, spread out and diverse across more units, or you're pretty happy with doing it mostly by yourself or a few key partners?
It's tough, right? I'm obviously in transition. I'm new in investing, and you could say I haven't been doing this forever, and my goals change and evolve, and it's been a great ride. And I look, sometimes I get tempted by the syndication. I'm like, yeah, that would be great. Like, let me go get some big properties. And then I look at the model of syndication and I'm like, well, do I really want to build up a whole team to do syndication, which would be great. Then I could have a lot more units in a lot more areas, but would it really give me more cash flow, more, as I'm paying my team and I have to do this? So I'm not really sure. I kind of go back and forth on that. But I do know for sure, if it's a good deal in my area, it doesn't matter the size. I have now the capability to take it down. Like if I have to bring on more partners, limited, not really even syndication, I just know people now,
right.
I don't even have to spread it out there. If the deal's good, and by good, I mean, I don't have to wait for the sell to make money on the IRR. It really cash flows every month. And my investors who invest with me kind of expect that, like, we don't have to wait for the sale. It's just like, okay, this is kind of a long-term play, which is a different type of group of investors. But those are the type that are kind of aligned with me. It doesn't matter the size of it. If it's in Chattanooga, I can take it down now. So I'll look at those opportunities, whether I develop a whole company that does syndication and goes in different markets. I don't know if that's really for me.
I think it's a nice stepping stone though, because I talk about it all the time. I tell people all the time, you want a $1 billion company with $1 billion worth of problems, or you want $1 million company where, okay, it's not the sexy Lamborghini in the driveway, but you got no worries, right? So, but I think that's a fair stepping stone. That's what I would recommend anyone doing. If you don't know, or you're in between, or you're on the fence, well, your backyard. And if the perfect deal comes in, right, whether it's a limited or syndication, you just I'm telling you, it's going to work, right? Because you know what the leasing looks like, what the management looks like. Well, shit, right? And then if you love that, it's like, wow, this is big, this is good, this is nice. Maybe you look, maybe you go, 5 miles north, 5 hours north, 5 hours south, because from Chattanooga, you're going to touch on a lot of markets, right? It's a good location where you got, like you said, you don't have, different, you got Nashville, you got some stuff in Georgia, you got some stuff in Alabama, Mississippi, North Carolina. And so you got some good areas right there that if that bigger deal works, hey guys, you want to take a little bit more of a gamble on something like this. So I think it's a fair stepping stone, because I go back and forth all the time. Like, do I want to buy another 10,000 units, or do I want to buy 1,000 of my own units? Right.
Right.
So I get it.
Yeah, it is like, I make, and I'm a simple person. Like I'm used to not living off of much. So I make enough money. It doesn't really, I'm not doing this because I need more money in my pocket anyways. I do it because it's fun. And if it's not fun, I'm not going to be doing it anymore, honestly. And I do it because I'm good at it. And I like doing things that I'm good at.
I think most people do.
That makes a lot of sense.
Yeah. All right. Let's wrap it up there. I want you to leave us off for if there's any newer property managers, or somebody is thinking about getting into property management, or they're going to buy their first house and they're debating whether to use property management or not. Is there like one piece of advice or one place you would point people in a direction to kind of, maybe a mistake you made or something that would help them out, basically?
So if you're just starting out, and even if you're thinking of buying and you're going to use property management, research the laws in your area about evictions and tenant rights and what you can do and what you can't do. Like, go and like Google it, like pretend like you're a tenant who's going to be evicted and try to fight it. Like, there's going to be all sorts of tools online to help you fight the eviction. So you know what you're going to be up against, and what's going to be the realistic worst case scenario when this comes to pass. How long is it going to take? Because that's a huge factor in having someone in your place that's not paying, and especially now with COVID, right? And then being able to fill it quickly. Those are kind of like your two main real danger areas, as if someone's going to manage it or if it's your new place. So know how long it's going to take you to kick someone out, if that is, and then also know the market as far as how long it's taking stuff to fill, because people don't believe this, but like a month vacancy can make you non-profitable for a whole year. It's just that serious. Yeah,
for sure. Awesome. I think that's great. Great place to leave it off. David, thank you so much for coming on. If people want to get in touch with you, follow you, learn more about you, where can they do all that?
Yeah, on Instagram, I answer most DMs, so just shoot me a message over there. I'm at DIY_landlord.
Perfect. Guys, definitely go follow him. I do. I definitely learn some stuff every time I see his posts, so be sure to go check it out. Guys, thank you so much for listening to this episode of the podcast. If you're not already subscribed, it would mean the world to John and I if you would do so. And if you are, please send it to someone that you think would get a tremendous amount of value from this episode. David, once again, thank you for coming on.